In this video, I will show you the efficient way of combining the price action and supply and demand analysis for swing trading. I will share with you a complete swing trading strategy. You will learn how to identify a safe entry with supply and demand zones, efficient stop loss placement, and a lot of useful swing trading tips. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. To effectively trade supply and demand zones, first you should analyze the price action. Price action analysis is a crucial component of any swing trading strategy, and one of the best and the most reliable time frames for price action analysis for swing trading is the daily. Here we are in a CAD-yen pair on a daily time frame, and let me show you how to execute the price action analysis properly. For the price action analysis, we are going to examine the significant price movements, and we will try to identify the current market trend, and we will try to understand the current market sentiment. You can see that first CAD-yen pair was consolidating. You can see that for a quite long period of time the market was trading within this horizontal range, and the market was trading in sideways. Then, because of some important fundamental news, the market started to fall rapidly. The market dropped, and with this bearish movement the market established a strong bearish trend. Then once this lows were reached, the market started a correctional movement. You can see that the market started to grow, and if we analyze the highs and lows, we can see that the market started to grow within this rising channel. Become a member of my Trading Academy, watch how I swing trade live on daily VIP live streams, learn different profitable swing trading strategies, and become a full-time trader. For more info, check the link in the description below. This bullish movement is the correctional movement. It is the correctional movement in a bearish trend. Why? Because our current bearish trend is determined by this bearish impulse, and all the movements that we see within this bearish impulse will be the corrections, the correctional movements. Then let's examine in details the price action within this rising channel, and let's try to look for some extra clues. You can see that the market was growing rapidly within this rising channel, and then reaching some highs, the market stopped growing. The market started to consolidate, and we started to trade within another horizontal range. We started a very extended sideways movement. And look what happened recently. You can see that not only the price violated the support of that horizontal range, but also the price violated the support of our rising channel. And in such a case, this rising parallel channel will be also called a bearish flag pattern. And this bearish movement, this strong bearish candle, will most likely signify that the correctional movement within this rising channel is over, and that the market is returning back to a bearish trend that we identified earlier. All these breakouts, all these clues indicate that with a high probability the market will drop. We can anticipate a bearish movement on a daily time frame, and we can look for a swing short trade. As we executed the price action analysis, we may examine that from the supply and demand perspective. Once you completed the price action analysis, and once you made a prediction where the market is going to go next, then you should analyze the market from the supply and demand perspective. The significant price movements always initiate from significant supply and demand zones. For example, you can see that this yellow resistance, this yellow zone, is a very significant area. Why? Because though the market was growing strongly, once that area was reached, we saw a strong bearish pressure from that. Why it happened? It happened because the sellers, the market participants who were selling, were placing their selling orders within that zone. And moreover, buyers were closing their buying positions once the price started to approach that zone. Such a zone will be called the supply zone, the zone where the selling orders concentrate. At the same time, let's examine this support right here, this horizontal support. you can see that multiple times from that zone strong bullish movements initiated, and even though the market was falling quite rapidly, once that support was reached, from that we saw strong bullish movements. It signifies that buyers were placing their buying orders within that zone. Buyers were buying from that, and once the price approached that zone, sellers were closing their trading positions. For that reason, such a zone is called the demand zone. One more thing that you should understand is that the trend lines also play a crucial role in supply and demand analysis. The trend lines from where we saw significant bullish movements attract the buyers, attract the demand, and we assume that the buyers will place the buying orders on such a trend line. At the same time, the trend line from where we saw strong bearish movements will attract the sellers, and we will assume that around that trend line the selling orders will be placed. Another thing that I should mention is that even the best and the strongest supply and demand zones are occasionally broken. It happens because of some high impact news or the market manipulations. For example, you can see that we got a significant demand zone right here, and you can see that many times that zone was respected and buyers were clearly buying from that demand zone. But you can see that it was violated. With this bearish candle, the market easily violated that demand zone. And after the breakouts, the demand zone turns into a supply zone, and the broken supply zone turns into a demand zone. And one more important thing that we should discuss before I will reveal my swing trading strategy to you is that the trend lines and the horizontal supply and demand zones may compose another supply and demand zones. Look at that rising trend line and that horizontal demand zone. This trend line and this horizontal demand zone composed the expanding demand zone in the past, and the buying interest within that zone was based on that trend line and on that horizontal structure. And typically such zones are even more significant than classic horizontal supply and demand zones or the trend lines. And of course, after the breakout, when such a zone is broken, such a demand zone turns into a very significant supply zone, the zone where the sellers will start placing their orders. And here's how we swing trade the supply and demand zones. Now let's combine our price action and supply and demand zones analysis, and let's try to identify a profitable swing trading setup. As we discussed earlier, the market is bearish, and in this strong bearish trend we got a correctional movement. It looks like the correction is over and the market is returning back to a bearish trend. Where the market is going to go? Most likely the market is going to reach at least the closest strong demand zone. So let's try to identify such a demand zone. You can see that here we have a nice demand zone, and we can make a prediction that with a high probability the price will keep falling at least to that demand zone. Then from where can we sell? Where can be our best point to sell the market from? And from such a perspective, our best zone to sell will be based on the closest supply zone, the zone where other sellers will place their selling orders. And here's our zone. That is our closest strong supply zone where we can place our sell limit order. From that zone, we are going to sell, and we will expect a bearish movement at least to the upper boundary of this demand zone, and we will place our take profit just a couple of pips above that. Then where should be our safe stop loss? Our safe stop loss will simply lie above that supply zone. That is the zone where sellers will place their orders. We will assume that sellers will start selling from that zone. And if the price goes higher, if the price violates that zone, it will signify that we are wrong in our predictions. And that sellers lost interest in that zone. So our safe stop loss will simply lie above that. And here we will set the pending order, the sell limit order. We will patiently wait for the retest of the broken zone. We will sell from there, set stop loss above that, and anticipate a bearish continuation. Your ability to combine price action and supply and demand zones is essential for profitable swing trading. Learn to recognize significant supply and demand zones. Learn to trade it properly. That will help you to make a lot of money in swing trading Forex. Let me know, traders, in the comment section if you have any questions. Also, traders, if you want to learn my swing trading strategy, if you want to see how I swing trade live, do not forget to check my premium group. The link in the description below. Also, traders, please watch my other videos.